Only the vice chair.
Okay, welcome to the Finance and Audit Commission, July 17th, regular meeting. This is a hybrid meeting with Finance and Audit Commission members, city staff, and members of the public participating in the downtown conference room and participating remotely. I would like to introduce staff and Finance and Audit Commission members present. Colin Albright, Brian Altman, down today. David Emery, Jackson Garten, Laura Milan, and Vamsi Velakaputi.
Yes.
Staff present include Administrative Services Director Brittany Mello, Finance and Budget Manager Jared Hansen, Senior Accountant Jing Chen, and Management Analyst Adrian Patina. Adrian, would you please provide instructions to the Finance and Audit Commission and members of the public on how the meeting will proceed?
All right, certainly. Thank you. So welcome everyone to the July 17th regular meeting of the Finance and Audit Commission, and thank you for attending. At this time, we ask that the virtual members of the Finance and Audit Commission please remain on screen for the duration of the meeting. You'll control your own webcams and microphones. Staff will engage webcams and microphones to make presentations and to respond to members of the Finance and Audit Commission. For members of the public who are in attendance and wish to provide public comment on an item on tonight's agenda, after the chair calls for public comment on the item you wish to speak on, virtual participants will engage in the raised hand feature at the bottom of the screen. If you are dialing in from a cell phone or from a landline, you will press *9, and if you are in person, you'll complete a speaker card at that table and return that to me. So that concludes my instructions, and I return the meeting to you.
Okay. Under public comment, the public may address the Finance and Audit Commission on any subject not listed on the agenda. Each speaker may address the commission once under public comment for a limit of 3 minutes. Please clearly state your name and address or political jurisdiction in which you live. The commission cannot act on items not listed on the agenda, and therefore the advisory body cannot respond to non-agenda issues brought up under public comment other than to provide general information.
All right, if you would like to provide a general public comment on an item not on tonight's agenda, if you are engaged or if you are logged in virtually, please engage the raised hand feature at the bottom of the screen. If you are in person, please complete a speaker card. And if you are dialing in from a cell phone or from a landline, please press *9 now. And I'm seeing no requests for public comment at this time, so you may continue.
Okay, under the consent calendar, the Finance and Audit Commission may take action to approve routine business items in one motion unless a Finance and Audit Commission member, city staff member, or a member of the public requests that an item be discussed or continued to a later date. Adrian, do we have any public comment on the consent calendar?
All right, if you would like to comment on agenda item D1 on tonight's consent calendar, if you are logged in virtually, please engage the raised hand feature at the bottom of the screen. If you are in person, please complete a speaker card and return that to me. And if you are dialed in from a cell phone or from a landline, please press *9. Seeing no requests for public comment, you may continue.
No motions. Oh. Under regular business, the Finance and Audit Commission considers recommendations.
Sorry, just one, we have to make a motion to approve the. consent
Adrian,
calendar.
please state the motion.
Yes, thank you. Very good. Motion to approve the consent calendar, and then we'll need someone to make the motion and then someone to second, and then we'll vote.
I'll make the motion to approve.
All right, Commissioner Day moves. Do I have a second?
Second.
All right. And I will take a roll call vote on stated motion. Brian Altman.
I can't vote on it. I don't know what. You're talking about the minutes. I'll pass.
Commissioner Day.
Yes.
Commissioner Emery.
Yes.
Commissioner Milan.
Yes.
And then Commissioner Velagaputi. Or yes. All right, and the motion passes with Commissioner Altman abstaining.
Okay, under regular business, the Finance and Audit Commission considers recommendations from city staff on policy matters or administrative actions that require Finance and Audit Commission approval. Our first regular business item is to select a chair and vice chair.
All right, so our first regular business item tonight is to select a chair and a vice chair under the city council policy that governs all advisory bodies. It states that the chair and the vice chair must be selected in May of each year by a majority of the members, and they'll serve for 1 year or until their successors are selected. And each commissioner committee will annually rotate its chair and vice chair. So really the chief kind of responsibility of the chair is to preside over these meetings and run these meetings. And then if the chair is unable to do so and is absent, the vice chair will assume those duties. So we'll start with selecting the chair first. So we will take nominations. You can nominate yourself, you can nominate someone else on the commission. Then we'll vote on the chair, and then we'll do the same for the vice chair. Once the chair is selected, I'll hand over my second copy of chair notes and they'll keep the meeting moving from there. So we can start with, if there's no questions for me or any other clarifying questions, we can move on to public comment and then go through the chair nomination and voting process.
Question to me.
Oh, that's not one.
She's listing people and.
Oh, people didn't want to hear.
I bet she would just. Muscles long.
I'll
So
speak
just
up
like-
if I may.
Mhm.
Uh,
Go ahead.
given the importance of the position, and since I've been in the position of being a commissioner in this commission for the last 2 years, I'm taking the somewhat unusual step of nominating myself.
All right, so we have one nomination for Commissioner Day.
And I second that nomination.
What we vote on.
No other nominations for chair? Okay, so then we can move to a vote to select Commissioner Day as the chair of the FAC. So I'll start with a roll call vote. Commissioner Allman,
Yes.
Commissioner Day,
I didn't realize I was the part of the process, but the answer is yes.
Commissioner Emery,
Yes.
Commissioner Milan,
Yes.
and then Commissioner Velgaputi. Yes. All right, congratulations, Commissioner, now Chair Day.
Which means we'll have to send him the chair notes.
Thank you.
Virtually.
And then we'll move on to nominations for vice chair.
Somebody's gotta do
Move the director.
Oh, me.
Yeah.
Well, he'll have to read, just sure.
All right, so we have one,
I'll nominate for it.
two nominations for Commissioner Milan. Any other nominations for vice chair?
I'm volunteer next meeting.
All right, so I'll take a roll call vote for Vice Chair. Commissioner Altman.
Yes.
Commissioner Day, or Chair Day now, I'm sorry.
Sorry, I couldn't really, now I realize the difficulty of attending remotely. Were there two nominations?
Both for the same.
Oh, I didn't hear the first one. Sorry, yeah.
Sorry, there's only one nomination.
So no,
Yes.
Yes. Mhm.
Okay, thank you. Then my answer is yes.
Thank you. Commissioner Emery,
yes.
Commissioner Milan,
Yes.
and Commissioner Veliga.
Yes.
All right, thank you. So congratulations to our new chair and vice chair. And sorry, it is a little bit of a challenge to get Commissioner Day the chair notes virtually. So would it be okay with you, Chair, if Commissioner Milan continues to kind of run us through this one and then you'll get the next meeting?
Yes, please. I was about to request that. Thank you.
Thank you for your flexibility. Did we have to take public comment on that one? We didn't.
Oh, yes. Could you please call for public comment on E1?
Yes.
All right. If you would like to comment on agenda item E1, select a chair and a vice chair. Please engage the raised hand feature if you're logged in virtually. If you're logged in from a cell phone or from a landline, please press *9. And if you're in person, please complete a speaker card and return that to me. Seeing no hands or cards, so you may continue.
Okay. Our next regular business item is to review the city's investment policy. I'd like to introduce Administrative Services Director Brittany Mello to introduce the item.
Thank you, Vice Chair. So I wanted to provide a little bit of background information for our new commissioners. So the city partners with an outside firm to serve as the city's investment advisor. So we select the firm through a competitive request for proposals process approximately once every 5 years. So our current investment advisor is Insight Investment. Insight Investment is experienced in the industry and has been performing these services for the city since 2004. So they were selected repeatedly for their expertise. And we're on year 3 out of 5 years of their current agreement. Insight Investment is a proactive partner that communicates regularly with the city in providing their portfolio management recommendations. Staff is kept apprised of market trends and forecasts to achieve maximum yield in accordance with the city's investment policy, which the FAC is reviewing this evening. Tonight, we are joined by a few representatives from Insight to walk us through our annual review of the investment policy and to review our quarterly investment returns. So I'd like to hand it over to Mary Donovan, our Senior Portfolio Manager at Insight. And she can introduce herself and her colleagues, and then she'll be presenting for us. Yeah.
Wonderful. Thank you, Brittany. Thank you to the group for allowing us the opportunity to meet with you tonight. We're happy to present to you information on the investment policy, which my colleague Tirno Sila will be presenting. And then Mike Morin will step in and talk to you about the portfolio structure and the holdings. And then I'm going to pick it up at the end of the presentation for a discussion about the economic conditions and interest rates. So we are intending to keep our comments fairly brief, but we are here and happy to answer any questions you have and speak to you tonight. So I'll turn it over to Tirno to get us started. Thank you very much.
Great, thanks, Mary. Good afternoon, good evening, everybody. My name is Tirno Sila. I'm a relationship manager here at Insight, based in the New York office. It's a little bit late for us here, but very happy to be here with you all to give you a quick update on the policy. Just a little bit of background on Insight. Insight is part of the Bank of New York. So the Bank of New York is a 50 trillion financial institution. We manage 2 trillion at the investment and wealth umbrella. And then within Insight, we manage about 800 billion across fixed income. And we have a big focus on public sector groups like yourself. So this is an area that we've been involved in for many, many years and manage a lot of assets on behalf of towns and cities across California, but also other states. Talking about the City of Menlo Park's policy specifically, we've reviewed your policy again this year and really, based on our assessment, think it's in really great shape. We do not recommend any changes to the current policy. In thinking about how your policy is designed, kind of you start with the objectives, right? So your objectives are safety, liquidity, and yield. And when we look at the policy and kind of the different elements of it, it's really designed to help us, Insight, deliver on those three objectives. So the things that I think about when I look at the policy are, how are we kind of building a portfolio using portfolio structure to deliver on those objectives? And when you look at your portfolio, there are three things that stand out to me. The first thing is that it's conservative and high quality, and it has a short duration. So when you look at the policy, you'll see that you have a maximum maturity of 5 years on each security, and that's something that we follow. So kind of the short nature of the portfolio keeps it safe and keeps it liquid. And the second element is liquidity and safety. If you look at the mix of securities that we invest for you on your behalf, it's primarily US Treasuries, government agencies, and high quality corporate bonds. So when you take those three things together, you find that those building blocks really allow us to deliver on the liquidity piece and the safety piece, as well as the yield. And then one final aspect to highlight in terms of the diversification element is kind of the maximum issuer limit that you have. You have a 5% limit per issuer. So what that means is that we can't go out there and kind of invest all your assets in one or two names. We have to have a diversified portfolio to make sure that we provide a smooth ride across different market cycles. So kind of when you take all of that together, it's a really well thought through policy that helps you put together a portfolio that's diversified, that's safe, and that provides the liquidity that you all are looking for. And I'll close by saying that the portfolio that we manage is in compliance with the policy, and the policy is in compliance with California state statute. So kind of we're checking all the boxes there. So I'll leave it there and see if there are any questions. Otherwise, I'll turn it to my colleague, Mike, for an introduction.
Well, the items are separate, so we would just keep the investment policy. We'd have to close out that item before we move to Mike.
Great. Any questions?
I do have a question. So there was a reference saying that this is a well thought through policy. Or sort of in your analysis, do you sort of judge the policy sort of against its own sort of goals in a compliance, or are you also in a position to be able to speak to how it how the city of Menlo Park is doing relative to other peer cities and towns?
Yeah, so the question is, are we making the assessment in a vacuum or just looking at your policy by itself, or can we compare across towns and cities?
I was wondering if you would be in a position to comment on how it compares against peer towns and cities.
Yes, we can. That's definitely something we can do. I think in general, you'll find that because of state statute, a lot of the kind of building blocks and the pillars are going to be fairly similar. Where you might have differences is depending on liquidity needs and kind of the amount of revenues and expenses different cities and towns have. They may have a different appetite for how much they want longer versus shorter, or different adding other investment types beyond the three that I just mentioned. So We have some clients that might consider adding securitized products, for instance, for those that are that have a little bit of a higher tolerance for market volatility. But for the most part, these are going to be conservative and very similar to what the city of Menlo Park has in place.
Okay, so maybe again, what I'm hearing is sort of you were saying the city of Menlo Park is doing well in comparison to the needs of the city of Menlo Park at this time. From the perspective of the needs of the city of Menlo Park at this time. Okay, thank you for that clarification.
You're welcome.
Can I add on just a little bit?
Please.
Okay, I just wanted to say that as Tierno mentioned, the investment policy constraints are governed by state statute. So we see a lot of consistency amongst our California clients with respect to the types of securities that we can invest in. As Tierno mentioned, not everybody takes advantage of all of the security types authorized by state statute. So there is some variance. The policy should reflect the entity's unique risk objectives and constraints. What I wanted to just draw forward, though, was how last year you implemented some ESG language to your investment policy, and that's a unique characteristic that we don't see with all of our clients. I would say that many clients have not yet adopted ESG specific language, and I just wanted to bring that forward as a kind of a characteristic of the city of Menlo's. Menlo Park's portfolio policy that is unique. So, thank you.
Maybe a quick follow-up question for that. That change in the ESG language actually prompted change in the portfolio, or was the portfolio already in accordance with what the new language was?
The portfolio was already in compliance with the ESG guidelines with respect to prohibiting the purchase of certain types of securities issued by fossil fuels, that sort of thing. We were already in compliance with that. But the ESG language has provided an opportunity for us to apply a lens to the portfolio through security selection. And we do that as securities mature. Okay, so we're not selling a bunch of bonds to change the allocation in the portfolio, but as securities mature, we will have our corporate lens consider the ESG ratings in order to provide the best in class ESG exposure within that corporate universe that's authorized by state statute, single A rated corporates and above. So yeah, it's just another way of looking at that risk metric on the ESG side.
Thanks.
And just to add a little bit, but prior to last year, we had kind of informally been tracking and reporting on the ESG ratings, but it wasn't an official part of the policy. And City Council requested that change, and so that happened last September, I believe.
I guess I have a basic newbie question. Just at a very high level, how does funds go in and out of this investment portfolio? Is it something that the city council allocates as part of the budget once a year, or and then how do the funds come back, or just what at a very high level, how does that work?
Mm-hmm.
So at a very high level, the funds will be transferred over to BNY and to the it's actually through US Bank that you have the custodial account through. So that gets transferred over to US Bank, and then they are able to take that and invest that in what they need to invest that in. That's done as we have excess cash on hand. But it's not like a specific dollar amount.
So it's so this year there's some excess cash, so city council says, hey, we've got some excess cash, let's put it in. And so
yeah, city council can do that, or as the investment advisor, Insight can advise us to move some more cash over there. We also will look at the balances in our checking account, make sure that we don't have a lot of excess that we have what we need in order to manage the day-to-day.
So how does it relate to the yearly budgeting process? Is it,
Doesn't have anything to do with.
oh,
budget.
okay.
I have one follow-up, if you don't mind. So do you, when like a bond matures, do you reinvest it, the total return, or just the principal, and then you have the return?
Yes, they, Insight actually reinvests
Probably either.
that in another security at the time.
So if the city ran a deficit, or say there was a flood or something, the city council could decide to sell off and then fund, then bring that money in to apply it to projects. Is that the?
Certainly, so.
I'm just making up.
Yeah, a good example is during COVID, when investment rates were really poor, we just weren't getting much
Sure.
for what we were investing. We had the Insight Investment guided the city to have a shorter duration for our portfolio, because we knew we weren't gonna get as much, so okay, let's make sure this money can be turned around in case the market does turn around. We don't want it stuck in these, poor return choices. We want to be able to free up that money to invest in higher returns once the market conditions changed. So they're constantly advising us on things like that to get the most return possible, which is part of the investment policy guideline. If the council were to, be working towards a large, capital project or something that needed a lot of funds quickly, we would inform Insight if needed, and we could draw down some of those and not reinvest it. But in general, without that guidance or extra layer of direction, we would reinvest those to continue making as highest return possible.
And outside of the Insight managed portfolio, we also have the LAIF account, which is a state local agency investment fund. And that's a very liquid fund, so we could get that same day if we need money from that. And we have a
3%.
small dollar amount invested in that as well to turn over if we need to quickly.
So we can respond pretty quickly if there
But
were.
it's not actively considered as part of the budget.
No.
Either way,
Nope.
going in or coming out.
The only thing that would be considered as part of the budget would be the projected investment return.
Yeah, I can see that,
So-
but I'm just looking at the number, about the investment amount.
Yeah, about 1.5 million-ish is what we budgeted for the income from the portfolio.
Well.
It's probably gonna be more than that.
Thanks.
Another related question. So just like last year, there was advice on adding the ESG clause and lens. Do you have any other sort of advice or additional commentary beyond what you already mentioned? This is to the Insight team.
Do you mean with respect to the investment policy?
That's correct, Mary.
Okay, thank you. We have reviewed the investment policy and do not have any recommended changes this year.
Okay, thank you.
You're welcome.
If there's no further questions or comments, we can take a motion. That's the next step.
We need to call for public comment first. And then
I'll just confirm, any clarifying questions from the Finance and Audit Commission before taking public comment?
Nope.
Okay, Adrian, do we have any public comment?
All right, if you'd like to comment on agenda item E2, review of the city's investment policy, if you are logged in virtually, please engage the raised hand feature at the bottom of your screen. If you are dialing in from a cell phone or from a landline, please press *9. And if you are in person, please complete a speaker card and return that to me. And I'm seeing no requests for public comment at this time, so you may continue.
Okay, I'll now open for Finance and Audit Commission discussion.
Add all the,
I guess just one question. So what are we voting for in the motion? Is just to send it to council, so they reapprove it for another year, is that right? Okay. Yeah.
Yeah, kind of to follow up. On what basis do we approve it? Right, what, I guess in the past, again, another newbie, but question, in the past, on what basis does this committee approve it? They said, yeah, that looks like sound investment strategy, or the report looks like it's gonna take, what's the typical criteria that in the past has been used to say, go ahead?
Yeah, typically there aren't very many changes on a year-to-year basis. Sometimes there might be, a change in law or something regulatory that we need to fold into the policy. Last year was kind of an exception with the city council recommending revising the policy after the commission had reviewed it and sent it to the council. Most of the time, it's pretty stable since it does follow the statutes, but it's a good opportunity for the commission to review annually and council to adopt, to be able to ask any questions and have transparency with the public for what's in our investment policy.
Okay, if there's nothing else, Adrian, can you state the motion?
Certainly. So motion to recommend the investment policy to the city council. So do I have a motion and a second?
I'll propose a motion to recommend policy to the council.
And a second. All right, so I will take a roll call vote on the stated motion. Commissioner Altman,
Yes.
Chair Day,
Yes.
Commissioner Emery,
yes,
Vice Chair Milan,
Yes.
and then Commissioner Belgapudi.
Yes.
All right, and the motion passes unanimous.
Okay, our next regular business item is to review the investment portfolio reports for June 30 and recommend receipt by city council. I'd like to introduce the Administrative Services Director, Brittany Mel, to introduce the item.
Thank you so much. I don't have too much to say about this, other than we do have 4 quarterly reports that we bring to the commission. So you can track and review how we're doing on our portfolio, and then we bring that to the city council. And so for this past quarter, I believe Mike is going to be presenting.
Thank you, Brittany. My name is Mike Moran. I'm one of the portfolio managers working on the city's portfolio, work very closely with Mary, and I'm in the Boston office. So I will quickly flip. We have a lot of pages here, so I'm not going to cover all of them, but I will direct you to E3-4. I think these are the econ slides that Mary's going to go over. Do you want us to do the econ first, or would you like us to go over the portfolio first?
Apologies, we'll share the quarterly investment. Too many things open.
Nope, no worries. So if I can steer you to 3-4, perfect. So this is just a high level look over the portfolio's composition. So the portfolio's fair market value as of June 30th is $208.4 million, which was an increase of $2.4 million quarter over quarter. As previously mentioned, about 3% of the portfolio is in the LAIF account. So total about $7 million is available in the form of LAIF and cash. And as you can see in the middle section of the Insight managed assets, we aim to keep the cash balance low and the portfolio near fully invested. So the term portfolio is a very high quality and highly liquid portfolio. mainly made or split between several different sectors, but the largest allocation being treasury securities, being the most liquid allocation of the portfolio and the current yield of 3.65%. Instrumentality securities, primarily U.S. agencies such as Federal Home Loan Bank and Farm Credit Banks. Also very safe securities with implied government backing. These bear the same credit rating as the U.S. government, but do provide a bit more yield. So this is currently 4.02% in the city's portfolio. And lastly, on this page, a slightly smaller allocation to high quality investment grade corporate credit, below the 30% stated limit in the policy. We'll get into some more detail on these shortly, but this sector continues to provide further yield to the portfolio of 4.48%. And if you can flip to E3 3.10. Thank you. So overall, the city's portfolio positioning is in great shape. So the weighted average duration of the portfolio is 1.83 years, and we continue to recommend increasing the duration of the portfolio. We're hoping to get out to around 2 years as securities mature, and we can invest those farther out the curve. And overall, there's an unrealized gain in the portfolio of $789,000, and that's a gain across each of the 3 major sectors. We do expect this to continue to improve over the near term, and 2 main reasons for that. One, as our economic view plays out and the Fed lowers rates, which Mary will detail. And 2, as some of the securities purchased during the COVID era of low rate environment are reinvested at current yields, which should increase the gain loss of the portfolio. And on to the next slide, 311. This is just a look at the term composition of the portfolio. So again, this is a well diversified in terms of the curve distribution, but I would highlight that there's ample liquidity in the front end of the portfolio. So 31% of the portfolio maturing in the next year. And as I alluded to before, that will continue to support the book yield of the portfolio as those securities mature, and we can invest those at current yields. I'm going to skip a bunch of pages here and move to -21. So there's a lot of information here, but I won't get into all of it, but I just want to highlight this page for the members here that this has all of the individual position level data. So includes ratings, historical costs, market value, and duration of each security. The nice thing about this section is it sorts the issuers by largest to smallest. So at the top here, you can see that this is treasury notes and bonds. And if you move through the pages, you can see that the next largest sectors are agencies before we get into corporates. And the last page I will cover before handing it back over to Mary is E-40. Which is the ESG report. So as mentioned before, we do monitor the ESG ratings of the portfolio in accordance with the policy. So this report does a nice job of breaking out the ESG ratings into the E, the S, and the G, with 1 being the best and 5 being the worst. So overall, of the corporates in the portfolio, the average rating is 3. And as Mary mentioned previously, with the city's preference to hold maturities until investment, we will look to reinvest corporates into higher quality ESG ratings as they mature. But just briefly also on this page, you can see the other all the corporate names that are in here. So there's $58 million in corporate exposure overall, made up of high quality household names that you've likely heard of. The main portion being banks, followed by consumer sectors and tech. I said a lot there, so I'll pause if anyone has any questions and hand it over to Mary.
I'm just going to add on a little bit. It's a bad habit, but it happens. On this page, these are ESG scores that Insight develops. We have a really deep credit research team, and one of the services that our team is able to provide are individual ESG ratings for the issuers that we track and monitor. So these are all brought together by our credit team and information that's available to the portfolio managers. When we're making a recommendation to the City of Menlo Park for corporate security, we will bring forward these ratings as part of the discussion when we're recommending a purchase for the portfolio. So it's all a very holistic way of looking at the issuers within the constraints of the investment policy guidelines.
Well, I have one question. With the new administration, have you guys done any look at the correlation between ESG funds and non-ESG funds and how they're performing? And do we need to think about that?
Well, I would say that with the new administration, there is less emphasis on ESG considerations, but ultimately it does come down to each investor's decision on whether they want to use that as one of the considerations that they look at for their portfolio. We're not managing it as a fund per se, so we're looking at each individual corporate security as a standalone. And when like, for instance, when Apple comes up for maturity, we would look at that as an opportunity to recommend a security that has a higher governance score, right? As an opportunity to improve the overall ESG exposure for the city within that policy guideline. So I don't know, am I getting to the root of your question on that response?
Yeah, thank you.
Maybe I've got like a related question. It might be the same question, but as we're swapping out and going towards higher ESG scores, do we think there would be an impact on the market yield? Like, would it be lower, or is that not something you typically see? These kind of
We actually find that we're able to achieve very, very, very competitive returns within a constraint of trying to pick some of the better in class ESG scores. Okay, so it's it's not to say that in order to have a high ESG score, you're going to have a low yield. That does not necessarily correlate. It's just a matter of looking within an industry. Within the industry, you want to try to select the securities that have the better ESG performance associated with them, and it kind of comes in all shapes and sizes. So you might notice on here that we have a pretty positive environmental score of 2, right? 1 being the highest. So it's pretty positive on 2. And that's because we do maintain a fair exposure to the financials. And de facto, the financials have good ESG scores in the form of their environmental score. So there's just different ways of looking at it. I think that over time, and as we're presenting this information to you, you'll become more familiar with it. But I don't want you to feel like you're handicapped on yield by having an ESG consideration associated with your portfolio. We find over time that it is not that way. And honestly, the ESG information in its most fundamental view is simply an assessment of potential risk, right? So if there's a risk associated with governance, it might come in the form of a board that isn't well diversified, or a lack of readily available information compared to peers. That could be perceived as a risk. So these are just ways of identifying potential risks and trying to manage that within the portfolio. And fundamentally, that's really the base of what we're trying to do for the city.
Go ahead.
I would just add on that on this page, you can see a pretty good example of what Mary's talking about between Apple and Microsoft. They're two pretty similar tech companies, both have AAA ratings on their corporate credit. They trade at very similar yields, but here Apple has a 5 on their ESG score, and Microsoft has a 3. So you can, from a portfolio construction standpoint, put a similar risk in the portfolio, but you'd have a better ESG score in the Microsoft bonds versus the Apple bonds.
I was just going to add one thing too, is that the primary investment objectives are safety, liquidity, and yield. And the ESG is subordinate to that. So we look at that first before we then consider the ESG. So we call it as a ESG sensitive portfolio that takes into account those aspects, but it's not primarily focused on making sure we have high ESG scores. Again, safety, liquidity, and yield are our primary focus.
Agreed and understood. Yes. Are there any other
There-
questions on the portfolio section that Mike might be able to address before we turn it back over to Brittany?
Okay, and any questions before we take public comment? Adrian, do we have any public comment?
All right, if you would like to comment on agenda item E3, review the investment portfolio reports for June 30th and recommend receipt by city council. If you are logged in virtually, please engage the raised hand feature at the bottom of the screen. If you are dialing in from a cell phone or from a landline, please press *9 now. And if you are in person, please complete a speaker card and return that to me. I'm seeing no request for public comment at this time, so you may continue.
Okay. Do we? Have any motions, motion?
And do we want to pause and hear the economic review as well? This is something that we would not normally include in the investment portfolio, the quarterly reports. But since we had our experts in the room, we thought the commission might appreciate an economic update. You can turn us down and that's fine, but we wanted to offer that option.
Yeah, I'd love to hear.
Sure.
Terrific. All right. Well, thank you for indulging us on an economic review as well. So I'll do my best to keep this brief and not add on excessively. How's that? So looking, if you would, just onto page number 5, we have the yield curves graphed for you. Just going to take a quick look back at what's been going on with interest rates over the last year. So graphing treasury yields of various maturities as of June 30 of 25 and June 30 of 24, and drawing your attention to the 2-year treasury yield going from a 475 to a 372. So 100 basis points of movement in that particular security. And the Federal Reserve did decrease interest rates by 100 basis points last year. So that's definitely part of what's driving that change in the 2-year yield. The second chart shows the yields on the 2-year and 10-year treasury notes for a 5.5-year period look back, and commenting back to Brittany's comment on duration management in the portfolio. You can see in 2020 and 2021, when interest rates were really at rock bottom, 0% to 0.25% Fed funds target rate, the 2-year yielding very little. We were recommending a short duration for the portfolio. Then we moved through the period of the Fed increase in interest rates, and we had a nice long top with interest rates high for an extended period of time. Really gave us a good opportunity to realign those low yielding securities into higher market yields. And that's been really helpful for positive portfolio performance. And now that average yield in the portfolio at about 4%. So on to the next page, getting into where we are now and looking forward. The key takeaway slide shows that really the economy has really performed quite well, frankly. It's weathered a lot of the shocks associated with policy changes, and we have avoided the recession that the market had been calling for so long. Between the Fed increasing interest rates and then some of the policy changes that came through, there was a lot of expectation for recession, and that just really has not yet materialized. The issue at hand today really continues to revolve around inflation and inflation concerns associated with the tariffs, concerns that that will bubble through and get passed on to the consumer. Nonetheless, we expect that ultimately the Federal Reserve is very likely to decrease interest rates this year and next, bringing the overnight Fed funds target rate down to a level of around 3.25, which would be more of a neutral rate for the Fed funds target rate. So on to the next page, we have a look at the labor market. The Federal Reserve has the dual mandate to maintain full employment and stable prices. So with respect to the employment side of their mandate, the labor market has been really pretty good, okay? We're running with a 4.1% unemployment rate. It's been low, it's been consistent, and there has been pretty good job growth. But the job growth numbers are starting to lessen. Okay, so as an example, in 2023, we averaged about 216,000 jobs added each month. In 2024, it was about 170,000 average. In 2025, it's about 130,000 average. So I'm just saying, kind of like going into the cone where there's less job growth happening. And then also of concern is that the jobs that are being added are not as well diversified across the economy. They're starting to become more industry focused on a few sectors. We added 147,000 jobs last month. Of that, private payrolls accounted for 74,000. So the rest of it was not associated with the private market. There were a lot of government jobs added, particularly at the state and local level. So it's just an interesting dynamic on the complexion of the job growth that is a little bit concerning because it's not as broad-based as we would like to see. But it's still strong. Okay, and on the next page, it's an interesting look at a bunch of different metrics associated with the labor market. And what you want to kind of take away from this is that you have the bubble on the right-hand side when we were in COVID, where there was really tight labor market conditions. That was the time when, you know, everybody was saying, where did all the workers go? We can't find anybody to hire, all that. It was so tight. People were leaving jobs. The quits rate was high because employees felt like they could job hop and get paid to do it, right? Get a bonus to move into a new position. And there was that sentiment. That whole like paradigm has really changed. We're back now to pre-COVID levels on most all of those metrics. So we're more to a neutral level and potentially moving to more of a loose conditions in the labor market situation. So the labor market is strong, not trying to be an alarmist, but it's moving towards a more mature part of the cycle. Then on the next page, we start talking about some of the inflation conditions. And really, the tariffs have not yet truly come through in a meaningful way on the inflation numbers. The CPI is running at about 2.7% on an annual basis. The producer price index is about 2.3%. When you start looking at the components of the inflation indicators, you do see that the tariff sensitive sectors are seeing price increases. You're looking at that's coming through in sectors like appliances and other household furnishings, other durable goods, recreation goods, toys, things like that. Those price increases are related to tariffs, but the other sectors of the CPI and the PPI are strong enough to be keeping the whole thing pretty much under control at the moment. But the concern is the uncertainty. We don't know, business leaders don't know how this is all going to continue to unfold. There's a lot of uncertainty in the market, and that is leading to a certain amount of distress, frankly. On the next page, we're looking at how anecdotal information and forward-looking price index information coming through the regional Fed banks are illustrative of expectations for rising prices by corporations and businesses. So the current price indexes and the future expected price indexes are expected to increase, and that's in response to the tariffs. And how do the companies deal with that? On the next page, we have the responses from a questionnaire from the Dallas Federal Reserve Bank on how businesses would respond to rising prices. And the first thing that many of them will do, which makes perfect sense, is they're going to pass that on to consumers. Okay, they're not going to pass on all of the price increases. It wouldn't be a one-for-one, but it's very likely that if the tariffs actually get implemented in the way that they're being advertised, there will be some increasing price pressure that comes through on the inflation numbers. That is what the Federal Reserve is really struggling with. And also that is what businesses are struggling with. In response to that uncertainty, on the next page, you'll notice that some of the capital expenditure intentions are lessening, right? Businesses are less inclined to make meaningful investments and hire personnel in an environment of uncertainty. And we are in an environment of uncertainty. And so we're seeing that is impacting the capital expenditures. The tariffs are also married up with policy issues. And on the next page, we have this just quick quick and easy, soft slide here, but the legal challenges associated with some of the policy things coming through is just another source of uncertainty. So I'm trying to, not belabor the point, but recognize that in this particular environment, it's difficult for corporations to move forward aggressively. And so we're seeing some lessening on business spending. And then it is also difficult for the Federal Reserve. And on the next page, we'll talk about how the Fed is really preaching patience. What we have here is a graph of the Fed funds target rate. And you can see the dark line was what happened, right? We had the big run up in interest rates by the Federal Reserve from March of 22 through July of 23, bringing that Fed funds target rate up all the way up to 5.25% to 5.5%. The three rate reductions that we experienced last year, and then we're on hold, but expectations are for the Fed to move forward with rate reductions. The dotted lines are the expectations between the market, the blue line, and the Federal Open Market Committee, which is the green line. It's not exactly the same, but it's definitely moving in the same direction. And that's expectations for 50 basis points of rate reductions this year, another 50 basis points next year, 25 the following year, gets us down to that 3.25 kind of rate that we started off at the beginning of the discussion with Insight's projections as well, getting back to more of that neutral rate. I'm happy to delve into that more with you folks. Any of that piques your interest or curiosity, please let me know and we can talk more about that.
Thank you, Mary.
Maybe a question that's actually related to the actual portfolio we have, like how well protected is it against a spike in inflation? Is there anything that you take into consideration in portfolio construction for potential inflation spikes, or is it already relatively immune?
If I'm hearing you correctly, are you asking me how we're structuring the portfolio with concerns about inflation spikes? Is that the question? Okay. The primary objective over the last couple of years has been to extend portfolio duration. Okay, and we now have duration running. We have a couple of trades that we're going to be implementing here in the near term, which will bring our duration to 1.9 years. We have a benchmark in the portfolio, which is the 1 to 3 year index. That has a duration of about 1.8 years. So we're trying to get long the benchmark. We want to have more duration exposure than the benchmark because we feel like we're going to see interest rates coming down. So that's our base case. But we recognize that we could be wrong, right? Okay, could be wrong, and we could see that inflation rears its ugly head in a more meaningful way. Our fallback on that is the structure of the portfolio, the laddered portfolio structure, and the liquidity that Mike was mentioning earlier when he was showing you that maturity distribution graph, where you could see how the portfolio was structured across the 5-year time horizon, with 30% of the portfolio maturing within the 1 year area. And then I think, if my memory serves, about 20% in the next year. So we have a lot of dry powder that we can use to realign assets as conditions continue to evolve. We're not recommending that we take a super long duration exposure right now because there's a lot of uncertainty. But we think that the more likely scenario is that we'll see interest rates trend a little bit lower over the next year. And so we want to have a little bit more duration in the portfolio than the benchmark.
Any further discussion before the motion? Okay, Adrian, can you state the motion?
Certainly. Motion to recommend receipt of the investment portfolio reports for June 30th by the City Council. So do I have a motion and a second?
I make the motion.
All right, and a second.
I'll second the motion.
All right, and a roll call vote. Commissioner Altman,
Yes.
Chair Gay,
Yes, please.
Commissioner Emery,
Yes.
Vice Chair Milan,
Yes.
and Commissioner Velgapudi.
Yes.
All right, and the motion passes unanimous.
Thank you, Insight, for joining us.
Thank you.
Thank you very much.
Thank you.
Okay, and our last regular business item is to review and prepare the Finance and Audit Commission annual report out to City Council. And I'd like to introduce Management Analyst Adrian Patino to introduce the item.
All right, thank you, Vice Chair. So our last regular business item is for the annual report out of the Finance and Audit Commission's activities to the City Council. So right now, the Finance and Audit Commission is scheduled to give this report to the City Council at the August 26th meeting alongside two other commissions. So tonight, what we're asking is for feedback on the draft presentation for this annual update, as well as to designate a representative to give the presentation to the City Council. It is typically done by the chair of the commission, but if there's a scheduling conflict or if somebody else is really excited about giving the presentation, they can also be chosen to give that presentation instead. So I have the presentation that I can bring up on screen and we can go through it really briefly. So these annual report outs are typically pretty short, no longer than 10 minutes. They're given at towards the beginning of the city council meetings. And you'll be alongside two other commissions at this meeting. The other commissions will be giving their report out at the city council meeting before, I think. So the report out presentation that we have here first kind of gives an overview of Finance and Audit Commission, what the kind of broad goals are as defined by the city council's policy that kind of establishes all the different advisory bodies and gives an overview of who sits on the commission and introduces the 4 new members. Then it goes into an overview of the FAC's work plan goals. So these were the work plan goals that were approved by the city council last year in September and are listed here on the screen. And these are the kind of the items that sort of inform the Finance and Audit Commission's activities and kind of is the sort of basis of the work that we do here together, and is what the report out is really kind of focused on. So the next slide is the summary of the activities which kind of support that work plan goal, all of those work plan goals, and they include highlights of developing that work plan and recommending it to the city council, meeting with the city's investment advisor to understand the portfolio, similar to what we just did tonight, receiving quarterly updates on the city's grant funding, meeting with the city's auditor to understand the audit scope, the process, focus areas, and the result of the annual audit, review of the annual comprehensive financial report, and then some highlights around subcommittee work that were formed to kind of focus on specific areas of the work plan, which are listed there. And then it moves on to kind of a forward outlook. So a little bit of a preview before the next work plan gets recommended to the city council of what the intentions are. So really working to continue kind of like the core items of this commission's responsibilities, which are things like the quarterly review of the investment portfolio, continuing those subcommittee focus areas, facilitating the onboarding of new commissioners were appointed in April, and then the kind of overall North Star of this commission, which is to support timely, clear, and comprehensive financial reporting to help foster transparency and diligent stewardship of the city's finances. And then after that, it wraps up with kind of an open-ended, throw it back to the city council to ask if there's any guidance or any feedback that they would like to provide to the commission at that time. So that wraps up staff's draft. So we'll take any comments or questions, take public comment, and then we can kind of get into discussion about any changes or recommendations to the to our draft presentation, and if we want to designate our representative for the report out.
Oh, okay. Any clarifying questions from the commission before public comment?
Maybe just one on, because the work plan there, should we discuss the work plan for the next year ahead?
That will be a separate agenda item on a future commission meeting. So that's just what the current approved work plan is.
And then Adrian, do we have any public comment? And then again, it's for discussion.
All right, if you'd like to comment on agenda item E4, review and prepare finance and audit commission annual report out to city council. If you are attending virtually, please engage the raised hand feature at the bottom of the screen. If you are logged in via a cell phone or from a landline, please press *9. And if you are in person, please complete a speaker card and return that to me. Seeing no requests for public comment, so we may continue.
Okay, now I'll open it for finance and audit commission discussion.
I plan on being on vacation the last 2 weeks of August, so. My plan is not to be here for this one, states that that's not clear.
I mean, you can zoom in from.
I'm actually on vacation then as well, but I do have two questions. On the grant funding line item, is that inclusive of grants that the city applies for as part of our project funding? Or is that the city giving grants that we review?
The grant funding that we started preparing for the commission upon request last year, maybe a little bit longer now, was in recognition of how much grant funds the city receives. So the commission saw the high dollar value and said, I want to just track that on a quarterly basis. So every regular commission meeting, we bring that forward. Doesn't take any action. So that's why it's an informational item. It's just information to you, and you can pull the item for questions if you would like. But that is exclusive of like our community grant funding program that the city provides. So this is just grant funds that we receive because the commission requested it.
Okay, and then my one other note that I had made, it came up during our discussion with the team about kind of wondering how the ESG lens affects performance. I think it might be great to kind of proactively share that it's not, that's if anything, a good thing for performance or a neutral thing for performance. I think there's sometimes stigma that it means less performance. So I think that given the answer we got, it might be nice to highlight that the city having that lens is not it's not a marker of lowering returns, and the returns were really good that we saw. Just an idea.
So I think that depending on the commission's direction, that would be something we could prepare an extra sentence or paragraph in the quarterly reports and or the annual investment policy and the staff reports that go to council. But to clarify, are you requesting that information be on this PowerPoint?
No, it doesn't need to be in the PowerPoint. Yeah, I just thought that it was a really good point that we heard from Insight. And so
we'll plan to include that in the staff reports then. Thank you.
Is it sort of fair to surmise from this activity summary that other than the OpenGov portal improvement suggestion, the other subcommittees are at this time plan to be ongoing?
I think we can have, so the work plan will need to be redeveloped and reapproved by the city council in September, so we are planning to bring forward some options for a special meeting to develop that work plan in advance of that meeting, and once that work plan is approved by the city council in September, we can kind of revisit the composition of the existing subcommittees, see if those still kind of serve the desire and the direction of this commission, and see if there's new ones that the commission would like to form at that time, once there's a approved work plan. Otherwise, we kind of run the risk of maybe, forming a subcommittee on an item that, ends up not being part of the work plan going forward, or gets removed by the city council, which is within their purview to do. So that would be kind of staff's position and recommendation on that. So this kind of summary slide doesn't necessarily pin us to, continue those exact commissions or those exact subcommittees going forward. But that's certainly something that we can revisit as part of that kind of ongoing process.
Thank you. My question was in the context of the report out to the city, and what I'm hearing is we are saying that sort of we formed subcommittees last year, of which the Open Gov portal improvement suggestions have been placed forth, and leave it at that, because we know that for the rest of the subcommittees, we'll, if questions are asked, we can mention that we revisit them back in September and determine what the go forward plan is, either continue or look at newer items.
Okay, if there's nothing else, I think we can move to the motion. Adrian, please state the motion.
So I think really for this item, we need more, we don't necessarily need a motion. I think it's more of the commission's direction on the presentation, and direction on also a representative. So you can kind of bifurcate those two items and see if the commission has any kind of direction on any sort of changes that they'd like to see the presentation first, and then second, we can move to choosing a representative to give the report out, if that works.
Could I suggest, I don't think there's any necessary changes required, and it makes sense to chair day if he wants to do it, if he's available, because he's also commissioner during a period of time to report out. That'd be my suggestion, unless anything's wrong.
I don't see any changes currently.
Sorry, I thought we were going to go with first looking at the content and then deciding the presenter, but perhaps what I'm hearing again is to let you asking whether I should present and then decide on the content.
We're suggesting the content looks fine as it is, and also suggesting you could present as it is. So yeah, doing that together.
Okay, got it. Thank you. Sorry, the hearing on the microphone remotely is not great. Thank you for re-explaining. I would personally tend to agree with that the content looks fine as a summary. And, if there's no other feedback or objections, I'll be happy to present.
Any other discussion, comments from the commission on this?
Okay, are there any subcommittee reports since the last meeting? Yes, and no.
No, I do not believe so.
Okay, under informational items, the city staff provides updates on matters of importance to the commission. Informational items are not action items, however, a commissioner, the city A commissioner, city staff member, or member of the public may request to make a comment or ask a question on any of the informational items. Adrian, do we have any public comment?
All right, if you would like to provide a public comment on one of tonight's informational items, G1 or G2, if you are logged in virtually, please engage that raised hand feature at the bottom of the screen. If you are dialing in from a cell phone or from a landline, please press *9. And if you are in person, please complete a speaker card and return that to me. And I'm seeing no request for public comment at this time, so you may continue.
Okay, are we going to review those informational items or no?
That's up to the commission.
Okay, do you guys want to review the informational items? They are the quarterly update on city grant funding. And the information that the next regular meeting is October 16th, 2025.
Good. Click on the attachment. Again. Okay.
Here's just a question on the regular meeting. So did you suggest, Adrian, we need a special or potentially a meeting before October 16th?
Yes, because the next regular meeting is after when the work plans are scheduled to go to the city council. We'll need a meeting to develop the work plan to recommend for the way that special meetings are typically scheduled is that us as staff will help coordinate by figuring out what the availability might be. We'll send those options out to the commission. And then if we have a majority quorum, which is 4 in-person members, we can have that special meeting to cover any special or specific topics that are needed in between our regular scheduled meetings, which are the 3rd Thursday of each quarter.
I have a follow-on
Hear
question.
from me shortly. Go ahead.
A follow-on question. Just, given it's summer and we are trying to meet in the next couple of months, in addition to you providing suggestions, would it help if we all provide some, well, for me, certainly, I'm happy to provide dates that I'm not around during the summer or known travel time, if that helps with sort of suggesting scheduling dates, or if there's already a process by which it is preferable the staff suggests meeting dates, we can go with that as well.
Yeah, so if you know that you're not going to be available, that totally helpful to send that over to us so we can take that into consideration for any recommendations that we make. So really the only thing that we're looking for when we make recommendations is that there's no other conflicting public meetings. That's really our kind of main criteria. So if you know that in advance it'll have a scheduling conflict, that definitely helps us make smarter suggestions.
Thank you. So I will definitely send it to you. Perhaps I'd also look to my fellow commissioners and say, if you're able to, if you already know times that you will be away and perhaps unable to attend remotely as well, if you can send that information, would it be fair to say to yourself, Greg,
yeah,
we send the information to?
yes,
that'd be wonderful. And sort of in my past experience, it gets, because of so many conflicting meetings, it is challenging to schedule time. So if we can, send our unavailability, maybe that'll make it a little easier. I don't know, maybe it'll make it more complicated, but at least there'll be a little bit more transparency.
And if I may recommend sending that unavailability just to the staff liaison and not copying your fellow commissioners, just to avoid running afoul of the Brown Act. Y'all aren't allowed to communicate more than 3 people
yeah,
on a topic related to the commission.
yes, thank you for that plug.
I could ask one more, I'm not sure in case we don't get to it, but just as a new commissioner, as a newbie, I probably still have some dumb questions. So is there an onboarding process, or is that something that we should discuss? I don't know if that's something that is already in the works or not?
There's an onboarding process that the city clerk's office puts together once a year. So that did happen a month ago or so. That goes over the Brown Act as well as the ethics training.
Yeah.
If you weren't able to attend that, I would suggest getting in contact with our city clerk, or we can connect you to.
I was
do
thinking
that.
more into, I saw the training for that, I was thinking
Great.
more in terms of the specifics of this council. So for instance, what would we need to know about the audit process? Are there previous meetings we can go through, but is there anything specific that'd be helpful to know, even though it's coming up down the line? Maybe we'll just pick it up as we go along.
Yeah, so certainly if you have questions, you can ask the staff liaison and we can coordinate getting answers to those questions. We can otherwise, as we present the items as they come forward, we would give an introduction to them, would have some background in the staff report. For the audit, for instance, we will have our audit firm present, and you can ask questions of the independent consultant versus staff too, so you can kind of ask both if you'd like. So however it works, we just don't have it on the agenda per se.
Anything further? Anyone? All right, with that, I think we can adjourn the meeting.
All right. Thank you.
Awesome.
Thanks, Chair Day.
Thank you.
Thank you.
Thank you.